Right now, the US dollar index is trading around 99.78, just shy of the psychologically important 100 level. The index has been consolidating after a modest recovery from Friday's lows, and it remains below the 100 mark as traders wait for fresh cues. This tight range reflects a market that is balanced between bullish hopes of a stronger dollar and caution ahead of the upcoming US CPI release. The 50-period simple moving average sits at 99.82, offering a mild near-term bias but not enough to convince bulls to push through resistance. In short, today's price action shows the dollar stuck in a waiting pattern, poised for a move once the inflation data arrives. Over the past few sessions, the DXY has attempted to build a base near 99.60, with recovery efforts repeatedly hitting resistance around 100.10. Analysts note that the 2-month bearish trend appears exhausted, suggesting a potential shift toward stabilization. The main catalyst on the horizon is the US CPI report due later today. A higher-than-expected inflation print could reignite expectations of further Federal Reserve tightening, giving the dollar the push needed to breach 100. Conversely, a softer CPI would likely reinforce the current consolidation and keep the index under the 100 barrier. Thus, recent price action is setting the stage for a decisive move driven by tomorrow's inflation data. The dollar's hesitation near 100 is already rippling through related markets. The Australian dollar, for example, is trading near its weekly high at 0.7069 against the US dollar, reflecting a modest bullish bias as the DXY remains flat. Gold prices have edged higher, supported by geopolitical tensions in the Hormuz Strait and the same caution surrounding the US CPI, which keeps traders wary of aggressive dollar moves. Meanwhile, currency pairs that are inversely correlated to the dollar, such as euro to US dollar, are showing limited upside potential while the index stays below 100. These movements illustrate how the dollar's range-bound state influences risk sentiment across Forex, commodities, and equity markets. If the US CPI comes in hot and the dollar manages to break above 100, technical analysts point to the next resistance zone around 100.10100.20, which aligns with the recent highs from early August. A sustained break above this level could confirm a double bottom pattern and signal the start of a new upward leg, potentially attracting trend-following funds and reinforcing bullish momentum. On the flip side, failure to hold above 100 would likely trigger a pullback toward the 99.60 support area, reinforcing the current range and keeping the index in a neutral stance. Traders should watch for volume confirmation on any breakout, as strong buying interest would increase the odds of a sustained move higher. For viewers, the key takeaway is to treat today's US CPI release as the decisive trigger for the dollar's near-term direction. Keep an eye on the 99.60 support and the 100.10 resistance levels, and consider using tight stop-loss orders if you decide to position ahead of the data. Regardless of the outcome, the dollar's current consolidation highlights the importance of patience and risk management in a market that is waiting for a clear catalyst. Stay tuned to the data, adapt your strategy accordingly, and remember that a well-timed breakout above 100 could offer a compelling trading opportunity.